This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus is expected to stick to its plans for a February output increase when it meets on Tuesday, predicting a mild and short-lived impact on demand from the Omicron coronavirus variant, three sources from the group of oil producers told Reuters on Monday. OPEC Plus, a grouping of the Organization of the Petroleum Exporting Countries, OPEC, and allies led by Russia, has been gradually unwinding record oil production cuts agreed in 2020 to counter the demand destruction from the pandemic. Current plans would see it raise its February production target by 400,000 barrels per day, BPD, as it has done each month since mid-2021.
China's commodities markets suffered through a turbulent year in 2021 as an energy crunch and subsequent government intervention roiled the prices of products from thermal coal to urea, whipsawing them from record highs to monthly lows in weeks. Still, the market is broadly set to end the year higher, notably tin, edible oils and thermal coal, though a second year of wild swings and sharp gains are unlikely amid expectations of more subdued economic growth. Factors such as the economic cycle, high inflation and mutating viruses exacerbated the volatility of commodity prices, said Wang Xiao, lead researcher at Guotai Junan Futures.
Moving on to the top news in the energy sector.
Indonesian coal miners are seeking a quick resolution to a government coal export ban that has caused fuel prices to rise and could disrupt the energy supplies of some of the world's biggest economies. The world's leading exporter of thermal coal on Saturday banned the shipments because of concerns it could not meet its own power demand. But the risk is a knock-on impact on economic linchpins China, India, Japan, and South Korea, which together received 73% of Indonesian coal exports in 2021, ship tracking data from Kepler showed.
Oil rose towards $79 a barrel on Monday, supported by tight supply and hopes of further demand recovery in 2022, spurred in part by a view that the Omicron coronavirus variant is unlikely to significantly dampen the outlook. Libyan oil output will be cut by 200,000 barrels per day for a week due to pipeline maintenance. OPEC and its allies, known as OPEC Plus, are expected to stick to a plan to raise output gradually at a meeting on Tuesday. Brent crude rose 95 cents, or 1.2%, to $78.73 a barrel as of 0923 GMT. U.S. West Texas Intermediate WTI crude added $1.03 or 1.4% to $76.24.
Next, we have the top news in metal markets.
Gold prices slipped on Monday as higher bond yields and rallying equities weighed on the metal's safe haven appeal as the new year gets underway, pushing it down from a 6-week peak hit earlier in the session. Spot gold fell 0.3% to $1,823.63 an ounce by 11:31 GMT, having touched its highest since November 22 at $1,831.62. U.S. gold futures edged 0.1% down to $1,826.40. The small setback in gold prices is likely driven by positive risk sentiment as gauged by rising equity markets, said UBS analyst Giovanni Stornovo.
Gold discounts in India widened to the highest level in 5 months this week as consumers in major Asian countries held back purchases into the year-end holidays as new virus-related restrictions were imposed. For the past few days demand was very weak. Jewelers were not making big purchases as retail buying has dried up, said Harshad Ajmera, a gold wholesaler in Kolkata. Dealers were offering a discount of up to $5 an ounce over official domestic prices this week, inclusive of the 10.75% import and 3% sales levies, up from the last week's $2. We will now look at the top news in the agricultural sector. China's biggest soybean grower, the northeastern province of Heilongjiang, plans to increase the area planted to the crop by 10 million mu, 666,667 hectares, in 2022, the official Xinhua news agency said on Sunday. China's soybean output dropped sharply last year as farmers decided to grow more corn because it was more profitable. China's 2021-22 soybean output was forecast by the Agriculture Ministry to fall 16.3% from 2020-21. The ministry had estimated the land planted to soybean in 2021-22 at 8.4 million hectares.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.